Yo, what's up everyone? Patrick here. Moving on to the next financial statement algebra question. So a new business had expenses of $430,000, dividends of $15,000, and net income of $65,000 during the year. At the end of the year, the assets and liabilities were $1,600,000 and $980,000 respectively. And we got to find these four things here. Equity at the end of the year, owner's capital at the end of the year, revenue, and then retained earnings at the end of the year. So as usual, let's draw out that flow diagram. So we got assets equals liabilities plus equity. Then the equity, that's made up of capital and retained earnings. And then we're going to have a change in assets equals a change in liabilities plus a change in equity. That's going to be made up of change in capital plus a change in retained earnings. And then the final balance sheet would be assets equals liabilities plus equity, and then the equity is made up of capital and retained earnings. And then the change in retained earnings, let's actually do it down here. That's equal to net income minus the dividends. And then the net income is revenue minus expenses, like that. So let's fill everything in. So new business had expenses of $430,000, so that's over here. Dividends of $15,000, that's over here. It had net income of $65,000, which is over here. And then at the end of the year, the assets were $1.6 million, $1,600,000. And the liabilities were $980,000, like that. And so filled everything in. This is also a new business actually, so I forgot the beginning balance sheet. It's just going to be zeros everywhere. And we got to figure out these four items over here. So let's just fill in what we can from here. Notice that we can figure out what's the change in retained earnings because we have the net income and the dividend. So 65,000 minus 15,000 would give us 50,000. Change in retained earnings, that would be over here. So that flows there. And notice with that, 0 plus 50,000 gives us the ending retained earnings. So we could fill in that right there, right? 0 plus this is that, and that's actually one of the things. So that's the fourth item, so that's going to be 50,000. What else can we get? Well, notice we can get the ending equity because we have the ending assets and the ending liabilities. So bring the liabilities over, 1.6 million minus 980,000. That would give us, what, 620,000? So that's the ending equity. That's this. And then notice because we have the ending equity, we have the ending retained earnings, we know that the capital plus the retained earnings of 50K have to equal that total equity, 620K. Bring this over, we'd get 570K for that ending capital. So 570,000 right there for the ending capital, which is actually the second item. And then the final item is the revenue, and we can get that over here because notice that we have the expenses and we have the net income. And we know that what? Net income is equal to revenue minus expenses. So net income being 65,000, expenses being 430. So one more time, net income equals revenue minus expenses. So we know the net income is 65,000, the revenue we're solving for, and then the expenses is 430,000. Yeah. Bring this over. So this would become a positive, right? 65,000 plus 430,000 gives us 495,000 for the revenue. And so notice that we ended up getting the four items. And depending on how you fill in the flow chart, it's not always going to be in this exact order. Sometimes the way you fill it in, you'll get it in different orders like we just did, right? But whichever way you do it, these are the final answers.